evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for August 22nd, 2019, and it's the day before the Fed's Jackson Hole. That's in Wyoming, and it's their annual meeting, annual conference. They'll be announcing information tomorrow. We just don't quite know what they're going to say. They may cut rates immediately. That's a low probability. What they'll probably do is talk about the future, or at least some outline or plan for what the Fed is looking at on the economic basis for the next few months and into 2020. That could be consequential. That was when they announced and as such, we are ready, willing, and able, and expecting a big move in the markets tomorrow. We'll have their press conference early in the morning session, and then we'll trade the whole day, and that can set the mood or set the tone for next week. So starting out with the S&P futures, we're into this resistance point, and let's talk about this quad grid. The quad grid shows us the S&P futures, gold, crude oil, and then the 10-year Treasury note. So all of these tie into the bigger picture. These are all hourly charts, and we're looking for money flow. If you're just trading equities, other markets can help give you guidance. For example, the gold market and the bond market, those tend to be, for the most part, inverse or negatively correlated with the equity market, which means when equity prices fell sharply in the beginning of the month, crude, positive correlation, fell with the stock market, but gold and bonds surged. They went the other way. So that's what we'll be looking at. And we see clear pathways for breakout maneuvers and price volatility tomorrow and into next week. But now let's start back with the S&P futures. In last night's video, I talked about the worst case scenario, which is a massive upward short squeeze breakout, especially if they do announce some type of rate cut or talk about that additional stimulus is necessary, or anything that the market deems to be very bullish from the Federal Reserve announcement or their annual meeting policy announcement tomorrow morning. Now, for the evening video, we're looking at these levels and planning. We aren't predicting, we're planning and getting our orders, our positions ready, hedging, taking off hedges, putting on hedges, and whatever needs to be done in our own personal accounts in whatever market you trade. So last night's video did talk about the sell swing potential for the equity market, and that comes to us from the daily chart. Again, into resistance 29.35. See plenty of time and price action there, but the market should come down once again from this 29.40 level. We have a downside or sell price pathway, takes us down to 28.11 and test out that prior low. That is the dominant thesis. Now, of course, whether or not that happens does depend upon the announcement tomorrow. So given that we've had 1, 2, 3, 4, or just about 5 trading sessions between this 29.11 and 29.35 level, yeah, we can bet we're going to see some volatility Friday, if not Friday. I'd be surprised if it didn't happen Friday, but it probably happens into next week. So that's your S&P. Dominant thesis, sell swing. Alternate thesis, or short squeeze, or big bullish volatility, takes us through 25 or 29.50 toward 3,000 and above. Now, let's think about the same concept in crude. So we do have a support shelf at about 54 per barrel, and we've had that level with the exception of a little nip beneath it earlier in the month. So we're watching this 54 level for any type of downside break. We do have a falling trend line. We don't get a lot of information from the daily chart in crude oil because it is in, compare the two here, in a consolidation. So stocks have been up, and then down. Crude oil has been up, down, flat, and then down. So crude oil is behaving a little bit with relative weakness, or it's a little bit weaker than the equity market. Where my cursor is into July, it did not make a new high with the equity market. So we do see the potential, if we combine them together, for crude oil. Let's zoom in from April. We can see a little bit clearer. For crude oil to trade down with the equity market, let's even draw some arrows here, down with equities So maybe down to about 50 per barrel. And with the S&P down to about 2,800, or Don's 2811 gravity spot. Well, if that's the case, if we see equities trade down, crude oil trade down, we will probably, if not certainly, see gold hold support at 1,500 and trade up to about 1,540, which is its prior high. The same will be true in bonds, ZN, ZB, IEF, or TLT. We have the same little flag or triangle pattern, the same support shelf for bonds. It's just above 130, and the prior high is just underneath 131. So we do have that upside pathway, but these would be considered dominant thesis, or probability is with you. What happens if that doesn't occur? What happens if last night's worst case scenario planning takes place? Which means, what happens if the Fed comes out and says, yeah, those interest rates, we're going to push them to zero? No, I'm just kidding. But if they cut rates, or at least indicate future rate cuts, that could be a big bullish catalyst for the equity market. Now, let's talk about that. In that event, we have an upside, call it an open air pocket, or an open air zone. Essentially a place where not a lot of price action has taken place, meaning this is our alternate thesis. We can draw that same logic because these markets are tied together in crude oil. That takes us up above, let's say 56, or holding support. Keep in mind the S&P is at 2,900, crude is at 54, 55 per barrel. If these markets hold and trigger breakouts above these prior highs, you probably see them both trade rapidly to the upside. For me, that's going to be trend days, or bullish opportunities, buying the flags or buying the retracements on an intraday basis. And again, that priority or precedent was here in June. So same little logic into resistance, and then did not go down, broke to the upside, and that gave the market a series of upward trend days. That was the case here as well. So these gray zones will be open air pockets, or at least alternate thesis, big move, unexpected move, and that will be triggered by a lot of traders who thought the markets couldn't fall, or couldn't go up actually, could fall, only could fall, could not go up. They will be stopping out. Now, does that relate to the other markets? Not directly, but if the case is true that equities push rapidly above 2950, again, alternate thesis plays, well, this is a big open air pocket too. We call this a drop zone. So gold could drop just as rapidly, not Friday necessarily, but into next week, down under 1450 per ounce. What about bonds? If we can draw a trend line and connect that about 130, we see a similar drop zone for bonds. And we'll do that with the box to make it clear. So the drop zone in bonds takes us to about 128. So all this being equal, we don't know the future. We only know what our positions are, how to manage positions, how to adjust or hedge. And that's what we'll be doing first thing in the morning, Friday session. And that probably carries over into Monday and Tuesday at least. So watch these spots for a dominant thesis or expected or probability, down move in the equity market, down move in crude oil, up move in gold, up move in bonds. But prepare yourself, limit your losses, and seek to profit from the unexpected move, and that is to the upside big time in equities, maybe not as big, but upside in crude, down drop zone potential in gold, and maybe a drop zone in bonds. Either way, this is a plan, not a prediction, and our trades come from what happens, and that catalyst is probably the Federal Reserve. As always, be careful and safe in this environment, especially tomorrow. Take care. Have a good evening. This is Corey Rosenblum with your Theo Nightly video for August 22nd, 2019.